This is Nightly Business Report with Bill Griffith and Sue Herrera.
Ready, set, hike. The Federal Reserve raises interest rates at Chair Jerome Powell's first policy meeting, and the stock market rally fizzled.
Getting closer, lawmakers make progress on their $1 trillion spending bill. What's in it and what it could mean for you?
Spring storm. Will the fourth, yes, the fourth nor'easter in 3 weeks send a chill through parts of the economy? Those stories and more tonight on Nightly Business Report for Wednesday, March 21st.
And we bid you good evening, everybody, and welcome. It was the first meeting of the Federal Reserve policymakers led by new Chair Jerome Powell, and as expected, officials raised interest rates. As a matter of fact, it was the sixth increase we've seen since the end of 2015. The central bank also said the pace of economic growth would likely pick up, and that all sent the yield on treasuries higher, and it sent the stocks on a very choppy afternoon ride. The Dow was up 200 points after the announcement came out, but it finished down 45 or thereabouts at 24,682. The NASDAQ lost about 19. The S&P was down about 5 points. Steve Leisman is covering the story for us tonight from the Federal Reserve in Washington, D.C. Steve?
Bill, good evening. In Fed Chairman Jay Powell's first press conference, the Federal Reserve hiked rates as expected. They went up by 1/4 point, and now they're going to try to maintain a new range of 1.5% to 1.75%. And they also signaled more gradual rate hikes ahead. The Fed increased its outlook for economic growth and lowered its forecast for unemployment down to 3.6% for next year from the current 4.1%. And it raised the outlook for interest rates, not this year. It was one forecast short of going to those 4 hikes that the market was concerned about. It upped the outlook for next year and for 2020, in fact, to a strong 3.4% then. Now, it doesn't see a whole lot of inflation, and I asked Chairman Powell in the press conference, how do you forecast better growth, lower unemployment, but you don't have any inflation to go along with it? Here's what he said.
After the crisis, unemployment was 10%. It's now 4.1%. You've only seen very gradual upward pressures on inflation and wages despite that very large increase. And that suggests that the relationship between changes in slack and inflation is not so tight. But it has diminished, but it's still there. So I think when you see those small changes in unemployment, that simply reflects the flatness of the Phillips curve.
A couple other points. He's surprised at the lack of stronger wage growth given how low unemployment is already. And when asked about the high level of the stock market, he said he only sees a moderate stability risk to the banking and the financial system. He does see more economic growth coming from fiscal stimulus or the tax cuts, but wouldn't say, by the way, whether or not that comes from the supply side or from the demand side. So in the words of John Lennon, did Powell pass the audition? Well, he seemed to get out of his press conference without making too much news, not making a major gaffe, and with little change in yields and little change in stocks. I'd say he would probably call that a win in his book, guys.
The John Lennon quote aside, you are a veteran and wise Federal Reserve follower. What do you think? 3 rate increases beyond this year or not?
I mean, I think 3 is probably a good bet, and the risk is for 4. But again, I don't think we're going to get to that area of risk of more rate hikes unless we get the economic growth to go along with it. What I would worry about, I'm not worried about this now, but if we had high inflation without the economic growth. Inflation is a puzzle. Inflation is the thing that central banks and economists should understand, Bill, but they don't. And it could be because of massive global forces. It could be the Amazon effect with cheap prices throughout on the internet. Right. They don't really quite understand why inflation is so low, but that's a big, big wild card for Fed policy right now.
Steve Leisman at the Federal Reserve. Thanks as always, Steve.
Pleasure.
Let's turn now to Jeff Sout for more analysis on the Fed, the economy, and the market. He is the chief investment strategist over at Raymond James. Jeff, always good to have you here. Thanks for joining us.
It's a pleasure, Sue.
So
Thank you.
A slightly more hawkish Fed chief, it seems, in his first address and his first news conference. What did you make of it?
I think you hit it right on the head. I think it was slightly more hawkish. He did say that the economic strength had moderated somewhat from the previous Fed meeting, but then they increased their expectation for growth and talked about the tight labor market going forward. So I think it's a bit more hawkish, and I think come the June meeting, there is better than a 50-50 chance they're going to put back in 4 rate hikes for this year.
What do you do with this for investment purposes then, Jeff? I mean, initially after the Fed made their announcement, the financial stocks went up. They need higher interest rates. Is that a safe bet right now, or are you looking elsewhere for growth?
No, I think the Fed is going to increase rates, but I think they're going to do it very gradually. A steepening of the yield curve certainly helps the financial stocks. I mean, a 1% increase for Raymond James, I think, drops $180 million to the bottom line for Raymond James. I would note that I told your producer, when the Dow was up 200 points, that usually the first move by the equity markets on an announcement like that is usually a wrong way move, and that's what it looked like happened today.
Mm-hmm. What about the inflation component? Are you worried that we are going to see inflation pick up past that 2% target that the Fed has put in place, or not?
I think it will pick up. I don't know if it'll pick up this year above 2%, but inflation is coming back. You cannot find an economic system in the history of the world that has had this much cash thrown into it and not had inflation come out of the backside. So I think it's going to be a gradual pickup, but I do think it's going to pick up above 2%.
What do you think, Jeff? Do you stay here in the U.S. and invest, or do you look overseas right now? What do you do?
I think you do both. I think that Europe is statistically cheaper than the U.S. valuations, but the growth here is probably better. Certainly the earnings growth here is better, but Europe is no longer in a recovery. Europe is in an expansion, very similar to what the U.S. is in.
All right, Jeff, we'll leave it at that. Thanks so much for joining us. Jeff Sout with
Pleasure.
Raymond James.
And as you know, the Fed also keeps a watch over the housing sector. And today we learned that existing home sales rose last month, even as prices also climbed, and there were fewer properties listed on the market. The National Association of Realtors reported an increase in sales of 3%. That follows a decline during the prior 2 months, and it could be an indication that competition is going to be very intense during the spring selling season this year. Sue?
Bill, the current account deficit widened 26% in the fourth quarter amid an increase in goods imported. And that was more than expected. The current account measures the flow of goods, services, and investments in and out of the country. And it has become a focus of Washington and Wall Street.
Meanwhile, the White House could impose tariffs on China for intellectual property violations as soon as tomorrow. As first reported by CNBC, visa and investment restrictions will not be part of that first package, though. Both the timing and the announcement of that scope remain in flux.
In Washington, a preliminary agreement has been reached on a spending bill which will keep the government up and running past Friday's deadline. Ilan Mui is back with us this evening to tell us where things stand. Good to see you as always, Ilan.
Good to see you, Sue.
What is the final agreement here between the Republicans and the Democrats?
Well, Republican and Democratic leadership met this morning in order to hammer out some of those final details. Both Senator Chuck Schumer and Representative Nancy Pelosi came out of that meeting sounding very optimistic, saying that they felt like they were making good progress toward a bill, and that they do expect to see movement toward a vote in the House on this bill tomorrow. Now, what is in it includes $1.6 billion for border security. That includes 33 miles of border fencing, not necessarily a big, beautiful border wall, but fencing, as well as money for border technology. There's also a provision in there that would make requirements for gun background checks more strict, as well as allow the CDC to study gun violence as a public health issue. So those have been some of the final sticking points that were holding up this deal. It appears that they've been resolved so far.
Where does the White House stand on this, Ilan? Has the administration weighed in on any of this yet?
House Speaker Paul Ryan brought this package to the president this afternoon to brief him on it and get his response. Ryan's office said the president does support it. The White House says that Republican leadership and the White House have shared priorities, including rebuilding the military, including funding for the opioid crisis. So it looks like President Trump is willing to sign off on this as soon as Congress passes it.
All right, Ilan, we'll leave it there. Thank you so much. Ilan Mui on Capitol Hill for us tonight, a snowy Capitol Hill. Bill?
All right, time to take a look at some of today's upgrades and downgrades. FedEx saw its rating raised to a buy at Stifel Nicolaus today following FedEx's earnings report that came out yesterday. The firm says that the stock will benefit from its continued growth. Price target was raised to $295 and shares finished the day to the downside during that late sell-off. Match Group saw its rating cut to neutral at Guggenheim. That firm is predicting an upcoming lull in Match's business until it introduces the next big paid online dating feature. The analyst is also concerned about Match's valuation following a recent run-up in that stock, and shares fell in today's trading session, down 2%.
The health insurer WellCare Health was upgraded to outperform from market perform over at Wells Fargo. The firm cites the company's progress in executing its multi-year plan to improve its performance. The price target is now $220. The stock closed about 3% higher. Jefferies is reaffirming its positive view on Activision Blizzard. That firm says concerns about competition from the popular Fortnite game are overblown. The stock is down about 10% from its recent highs. The analyst recommends buying it on the recent pullback, and the shares rose a fraction.
Speaking of which, still ahead, the new and very lucrative frontier in gaming.
Nice.
The European Union is proposing a new and aggressive tax on tech companies. One rule would impose a 3% tax on revenue generated from digital activities, including online advertising and the sale of user data. That measure alone could raise about $6 billion annually for member countries. A second measure would tax digital profits where they are generated.
CEO Mark Zuckerberg of Facebook is addressing the data scandal that is engulfing his company. In his first comments since the controversy erupted, he said that Facebook made mistakes and that it will further restrict developers' use to user data. He also said, quote, "We have a responsibility to protect your data, and if we can't, then we don't deserve to serve you," end quote. Facebook's COO, Sheryl Sandberg, said she deeply regrets that the company did not do more. But investors are not happy about that data leak. Bill?
That's right. A lawsuit was filed on behalf of an undisclosed number of investors who allege the company made misleading and false statements about its policies. The suit also claims that Facebook did not disclose that it allowed third parties to access data on millions of people.
The $100 billion video game industry is experiencing a new leg of growth thanks to the rise of competitive gaming. Josh Lipton has the details.
It might sound crazy, but people really do love watching other people play video games. It's known as electronic sports, or esports, teams of video game players competing before packed stadiums of fans, from San Jose to Seoul, where top players can earn millions of dollars a year. It's a big topic of conversation at this year's annual Game Developers Conference in San Francisco, and for good reason. More than 140 million people all around the world now regularly watch these competitions online. That's expected to jump to 250 million by 2021. Here's another way to think about it. In the U.S., esports viewers already outnumber those of the National Hockey League, and they're expected to surpass Major League Baseball in just 2 years, becoming the second most watched sport.
Esports generated an estimated $655 million in revenue last year. Now, that is just a fraction of the $100 billion gaming industry. To really break into the mainstream and prove successful, game analysts say esports has a lot to learn from traditional professional sports leagues like the NFL.
Esports needs something like a commissioner role, and there could be multiple commissioners for different popular games. But I do think it's important to be able to have an objective person who's viewed as the the main person who's the arbiter of looking out for what the sport is going to do and look out for its best interests overall.
There are publicly traded companies with exposure to esports. For example, Amazon with its streaming platform Twitch, and Activision, which owns an esports league called the Overwatch League. Earlier this year, those two actually partnered up, with the Overwatch League now streaming competitions on Twitch.
Piper Jaffray's Mike Olson estimates that the premiere of that competition back in January attracted 500,000 viewers at its peak. For Nightly Business Report, I'm Josh Lipton, San Francisco.
Sales rise at Winnebago, and that's where we begin tonight's market focus. The RV maker said that strength in its towables business helped drive revenue past expectations. Profits also rose, but it was not enough to top street expectations. So shares were down 5% today to $41.80. General Mills delivered a profit and sales beat despite noting that it faced higher food and shipping costs last quarter. The food giant said it expects those cost pressures to continue, and as a result, it did cut its full-year profit forecast. And as you might imagine, as a result, shares were down. In fact, for a time, the company was the worst performer in the S&P today, down 9% or thereabouts at 45.51.
Southwest Airlines said a competitive fare environment and fewer bookings would cause unit revenue this quarter to be flat. The airline initially expected the measure to rise as much as 2%. Shares of Southwest Airlines were off nearly 5% to $57.78. Sears says it has taken steps to slash its quarterly interest costs by $15 million. The struggling retailer said through private deals, it modified the terms on some of its borrowings and also exchanged some of its older bonds for new debt. Investors were pleased. They sent the shares up more than 1% to $2.32. Starbucks says it has achieved pay equality for all of its employees in the U.S. The coffee chain said it's been working towards that goal for years.
This next step around pay equity for all genders and races that do similar work in the United States is another one of those things that we do to make sure we are taking care of our partners, because by taking care of our partners, they in turn take care of our customers. And if we can attract the right talent and retain that talent here at Starbucks, that's what creates the magical Starbucks experience in our stores.
The company said it is working to make the same changes in its global workforce. Shares of Starbucks fell a fraction to $58.47.
Well, the calendar says it may be the first day of spring, but winter weather is slamming the East Coast. Businesses are closed, commerce is at a virtual standstill, and as you can imagine, thousands of flights have been delayed, if not canceled. Morgan Brennan braved the elements to explain how this fourth nor'easter we've seen in just the past couple of weeks could impact the economy. Morgan?
Yes, it has been quite the weather situation here for the books as we come into this spring season, at least from an astronomical standpoint. This is, as you mentioned, the fourth major snowstorm in the past 3 weeks to bear down here on the eastern United States, and that is beginning to have an economic and financial impact. Case in point here, this is LaGuardia Airport. Have you ever seen it so empty? All of the flights here from all of the carriers have been canceled from here since at least midday today. FlightAware says we've seen more than 4,000 flights canceled today. It brings the total for the month of March well above 10,000. That's a big deal for the millions of passengers that have been stranded this month, but it's also a big deal for the airlines because analysts say that the month of March is typically the busiest month of the first quarter thanks to spring break and the upcoming Easter and Passover holidays. So to see these types of disruptions, that is something likely to cut into revenue while also raising costs. And that is just one example in one sector.
No, it's not just about flights, but trucking. You know, the I-95 corridor along the East Coast as well has been shut down basically, and there's a lot of lack of movement for shipping and things too, right?
Absolutely. So it's not just passengers that are stranded by these weather events, but freight as well and packages as well. The New York, New Jersey port complex, which is actually the third largest shipping port for containers in the U.S., so very big, very notable, has been closed today. It is the second time in recent weeks that we've seen that. And we've also seen transportation carriers like FedEx, like UPS, put contingency plans in place and warn that there will be service disruptions in many parts of this region. The other thing I would note is that you are beginning to see what some experts call weather fatigue. Planalytics, for example, estimates that over the past 30 days with all of these storms, including the one today, that you're going to see a negative impact of $3 to $3.5 billion in retail sales. That is money that consumers would have likely spent this month, won't spend, won't likely be recouped by businesses. And you're talking everything from restaurants to apparel retailers to actually even home improvement companies. Because, as you mentioned, it is the beginning of spring. Store shelves are stocked with spring merchandise and not some of those winter items that folks are looking for given the weather we're seeing.
Well, I think we can all identify with that kind of fatigue. Morgan Brennan, thanks very much.
Yeah.
Coming up, most people only dream about being able to buy a private island. This one came with a big surprise. A major state pension fund will oppose the re-election of all directors at companies with all-male boards. It's an unusual move being made by the New York State Common Retirement Fund. Leslie Picker joins us tonight from New York. Leslie, the decision is certainly sending a message, of course, but will it actually make a difference in the diversity and composition in boardrooms in corporate America?
That's the big question. It's certainly sending a message to companies that don't have any women representatives on their board. But the question is, does their $200 billion in assets really have the kind of firepower needed to change the composition of boardrooms nationwide? Now, that's the key question. When you look at the $30 trillion in assets that U.S. equity markets have in market cap these days, it represents a very small proportion of those. And they mentioned that 400 companies they're invested in have no women representatives on the board. But even if they invested a large portion of their assets into one of those companies, it still likely won't represent a majority, which is what is actually needed to actually get someone off of the board. So that's one of the key questions with these types of proposals is what will the actual impact be? But if anything, it's certainly sending a message which can't be discounted.
Quickly, the bigger question, I guess, is why have boardrooms been so slow in bringing in women directors, huh?
That's the key question. A lot of boards blame it on the pipeline problem. Oftentimes, board members are representative of people who have the words chief executive officer on their resume. And as we know, there haven't been that many women chief executive officers. So there has been a movement now where people have been trying to get women on boards that may not have that CEO title, but may still be good board members for those companies.
Leslie, thank you so much. Leslie Picker in New York for us tonight.
Meanwhile, cloud storage company Dropbox now plans to price its initial public offering in a range of between $18 and $20 a share. That's two more than initially had been stated. The company will now be valued at more than $7.5 billion and will list on the NASDAQ under the ticker symbol DBX. Trading expected to start on Dropbox on Friday.
Well, it's not every day you meet someone who's bought their own private island, but Robert Frank did, and that island was full of surprises.
I bought the island on the spot. And after I said, what did I do? I just bought a friggin' island. What am I going to do with an island?
When sheet metal magnate Joe Massaro bought this private island in upstate New York on a whim,
I approached the fella who owned the island, and I said to him, maybe you'd be interested in trading a house and some cash for the island. And that's what we did.
he had no idea the deal valued at around $700,000 included this architectural treasure.
Moved into the cottage for weekends and just noticed how unique this building was.
Eventually, Joe researched the cottage's history, and he made a startling discovery. The quirky cottage was designed by the one and only Frank Lloyd Wright in 1949. And on top of that, Wright also designed a much larger residence for the island's owner at the time, but it was never built.
We bought pictures of the original drawings from the Frank Lloyd Wright Foundation.
And Joe spent 8 years and millions of dollars to bring Wright's drawings to life. All 6,000 square feet of it.
This house is so unique than any other Frank Lloyd Wright house. There's 26 skylights in here. Ceilings are 18, 12, and 14 foot high. Frank Lloyd Wright budgeted his house for $50,000. So I'm just going to tell you straight out. I went over his budget.
Joe followed Wright's drawings to a T, from the stone detail in the kitchen, showers, and bedrooms, all the way down to the decor.
The furniture is shown on the drawings, exactly what he wanted, the benches and the little tables. Everything that he put on the drawings, I put in his house. I had Walter Cronkite come out to take a look at the house, and he was friends with Frank Lloyd Wright. And when he walked through that door with me, he says, I feel Frank in his house. I love the idea that I was part of bringing the masterpiece to life.
In fact, Joe only strayed from Wright's plan in one major way.
When we were building the house, I said to my contractor, I want 1 more inch of concrete here. She said, why? I said, I'm going to put a helicopter landing pad here. They said, everybody thought, are you crazy?
Ironically, it was on a chopper ride that Joe learned another one of the island's secrets.
I didn't even realize it, but it's a perfect heart shape.
But now, Joe says he's ready to give his heart away to someone else. He's selling the island, Wright masterpieces and all, for about $15 million.
I'm in no rush, but I want to make sure that the person who buys it takes care of the master's masterpiece.
Who would that be?
Somebody as crazy as me.
For Nightly Business Report, I'm Robert Frank.
Modest little cabin on an island somewhere. Before we go, here's another look at the volatile day on Wall Street after the Fed raised interest rates. The Dow was up 200 points, but fell by the close, down 45 points, 24,682. The NASDAQ was down about 19, and the S&P lost about 5 points.
And that does it for us tonight. I'm Sue Herrera. Thanks for joining us.
I'm Bill Griffith. Have a great evening, everybody. We'll see you tomorrow.